The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9 a.m. Eastern Time, Thursday morning. 30 minutes to go until we kick off the trading day, and we got markets in negative territory to kick things off. You're looking at an S&P negative by about 16 points right now. Quite the acceleration we had yesterday towards the end of the day. We'll put it on a 15-minute chart, and whether it was Tuesday action, end of the day, it really begins to slide at about 1 o'clock. We end the day at about 38.90. We make it all the way back up yesterday at about 11 a.m. Eastern Time to 39.30. The acceleration really begins at about 2 o'clock, but that was the highs at 11 a.m. yesterday. We got a sell-off towards the afternoon. We reach a level of about 38.80 overnight. Overnight, we chop around between 38.80, 38.90, and then we accelerate lower beginning at about 6:45, almost 7 a.m. this morning. You drop from 38.90. We just hit 38.59 for a low in the last half hour in the S&Ps. We're currently trading down 16 points or almost 0.5% at 38.63. Tech stocks pulling back as well, 12,725. NASDAQ 100 off about 70 points, just more than 0.5%. You get the Dow off 0.5% as well, 32,163, and the Russell off about 1.2% at 2103. Remarkable when you look at the Russell. You back things up. This is only a 5-day chart looking at 15-minute bars, and we got a high print going back to about a week ago of 2342. You're talking about 240 points. You're talking about 10% that we've lost in the Russell. Let me just see. So I had 2342 on the chart. The high, actually, if you make it back to March 14th, is 2366. But again, on a 15-minute basis, going back 5 days, you're talking about 10%. The Russell gives up. Talk about some volatility. Speaking of volatility, Bitcoin. So much for the acceleration to higher prices on the news that Tesla will be accepting Bitcoins as payment for their vehicles. That news out yesterday. You had Elon Musk tweeting 2 nights ago that they'll begin accepting Bitcoin payments, probably happening in the second half of this year. You have Bitcoin spike up to 57,000, and just like that, folks, in the span of about 24 hours, you lose almost $7,000 in the price of Bitcoin. We're trading just above 50,000 at 50,905. Interesting that you get a sell-off on that type of news. Excuse me, crude. Giving back some of the gains yesterday. We'll talk about. They still got that ship, that tanker, stuck in the canal. Looks to be stuck potentially until Sunday or Monday at least. That'll be when the tide is the highest. That'll give them the best chance to get that thing out of there Sunday, potentially into Monday, but it could take longer than that. You're talking about a ship that is 200,000 tons. Not an easy task, to say the least. Gold contract, negative a bit. We're off about $5 at $17.27. Silver right now is down about 77 cents at $24.45. You take a look at silver, a little bit of a slide going on from $30 on February 1st. We were even as high as about $28 on February 25th, 1 month ago. We're trading right now at $24.47. We got to jump over to notes and bonds. A little bit of a reprieve from what we've seen recently, as in you got the 10-year right now trading up 4 ticks at 132.07. You get the 30-year up 11 ticks at 157.03. And we're talking about a yield right now that's correlating to the 10-year under 1.6%, 1.598% to be exact on the 10-year. Checking in on Europe, overseas right now, we get the DAX in negative territory by more than 1%. DAX is down about 1.1%. FTSE down 1.1% as well. CAC Carol down about 0.8%. Asia, you have the Nikkei positive 1.1%. Shanghai flat over in Asia. All right, jumping around to what else we have going on. We'll check out the VIX this morning as we get some negative market action. The VIX, all things considered, relatively near the lows we've seen post-COVID. You're looking at a VIX trading at 2160. All right, we got some economic data on Thursdays. We always get weekly jobless claims at 8:30. That number, the lowest number we've seen in a year, could be a little bit encouraging. We still got a long way to go, and it's still quite a number. In any other universe, folks, any other year, this would be just about a record. I forget what the record was prior to COVID, but it was around 670 or 692,000 jobs lost in a week prior to COVID. We have been stuck at that level every single week to the tune of 52 weeks potentially. The lowest number since March 14th of 2020. So claims totaled 684,000 for the week ended March 20th. The first time the number's been below 700,000 during COVID. Economists have been looking for 735,000. So better than the economists were looking for. Still, though, folks, a long way to go. We also got the third reading, let me put this right. Yes, the third and final reading of fourth quarter GDP. They increased that to 4.3%. That's the final reading for the fourth quarter GDP numbers. Strong numbers there, 4.3%. The number that there was previous estimate of 4.1%. So decent numbers across the board, right? You have less jobless claims. You have greater GDP growth than we thought. But nonetheless, folks, we see negative market prices coming at you with the S&P down about 20 points. All things considered, when you put it on a daily chart, we're basically chopping around right near all-time highs, folks. The all-time high in the S&P was within almost 20 points of 4,000. We're trading right now at 38.62 in those S&Ps. All right, what else we got going on? Stories out there. We'll check to some of the stocks actually moving with some earnings. How about Olive Garden delivering in a big way? So Olive Garden coming out with their numbers, and they got a lot going on in here in terms of what they have. We'll pull up the chart. DRI is their symbol. The 15-minute. They come out with the numbers, I believe it was this morning, right? Yes, 7 a.m. this morning. You're trading higher to 139 from 134. I mean, this chart, if you were able to peg the companies that weren't going to go bankrupt, folks, at the bottom, Walmart, let's back it up on the 3-year weekly to get the full low. I mean, remarkable, folks. When you pull up a yearly chart, just going back a year, you're not catching the lows anymore. March 23rd was the lows. We're past a year from the market lows. Darden made it to 26.15 before the market figured out that they probably weren't going to go bankrupt. We accelerate from there. The whole year we've been trading higher just in the last week. I mean, look at how many green bars compared to red bars we got in this ascent to higher prices. Darden, strong numbers that they come out with. They're increasing their pay for their tipped employees. They're also going to, I think they got a buyback. Yeah, new $500 million share repurchase program. They're opening 33 new restaurants this year as well. Strong numbers. You got Darden trading higher to the tune of about $5, about 3 to 4% higher on their open. On the flip side of that, Nike. You don't want to upset the Chinese government, folks. If you're doing a ton of business there, you might want to if you care about humanity, though, in terms of what they have going on in terms of slave labor. Nike, in a little bit of trouble this morning, extended. I mean, we were just trading Tuesday at 140 on Nike. We're now down 10% from where we were there. You're trading at 126 right now on Nike, down an even $14, excuse me, from the 140 price. I mean, overnight, you're down, what was that, $7 or $8? That having to do with, let me pull up the stocks making moves with Nike and zoom it in. So Nike's the target of criticism on Chinese social media for a statement in which the athletic footwear and apparel maker said it was concerned about reports of forced labor in Xinjiang. Nike also said it does not source products from the region. There's a battle, folks. That's where a lot of things do get made. Chinese government, they don't like to hear that. Be interesting to see how that shakes out. You're seeing the market reaction, though. Nike does a tremendous amount of business in China, not what the market wants to see, potentially upsetting that relationship. Nike trading lower, you put it on a daily, and you're going to open at 125, folks. We're back to basically prices that we were trading at in September from their earnings event 6 months ago. Stay tuned, folks. We'll be right back with Kevin Hincks.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. 9:18 in the morning Eastern time. We're talking about 12 minutes to go until the start of trading, and we get the markets basically at session lows. S&P's down 20 points. Tech stocks, NASDAQ 100 down about 100, and you get the Dow off 155. The Dow going to see a little bit of weight here with Nike, and don't underestimate this one, folks. If there's going to be some problems between Nike and the Chinese government, watch out in this stock. And as I mentioned, you're now the low for that gap dating back all the way to September 23rd. The low is 125.26 as to get into that gap, and we're trading at 125.50 right now. You get into that gap and you fill that gap, folks, you're talking about a low of 112.85. Excuse me, the high there, 117.20 would be filling that gap all the way back to September of 2020 earnings on Nike. All right, jumping around to what else we got going on. Taking a look at the jobless claims that came out at 8:30 this morning. Interesting when you look at where some of the data is. Decline was led by fewer unemployment claims in Illinois and Ohio. They got a long way to go, folks, in a big way, though, in terms of, you know, the one way that Bloomberg clarifies it. Let's say, where do they just have it there? Shame on me. I'll find it. But nonetheless, they say well above the peak at the last recession. Folks, it's still almost record territory that we're dealing with in tune to 680,000 weekly jobless claims on a weekly basis. That's basically a record weekly jobless claims number if we weren't in COVID. So we got a long way to go in a big way. All right, jumping around, what else we got going on in terms of stocks making moves? I want to talk about Rite Aid. So this is an interesting one in terms of how things affect things, right? How you may think Rite Aid, maybe they have more business going on, but boy, how about Rite Aid expects to report a loss for its just concluded fiscal year compared to analyst forecasts for $125 million profit. Why are they going to record that? Because they have a 37% drop in sales of cold, cough, and flu-related products as people suffered from these far less during the pandemic. Rite Aid, interesting when you think about it. We've all been locked down, the flu cases well off where they'd be, but Rite Aid, look at that volatility over the last year, and look at that drop on disclosing that they're going to lose money as opposed to making money. You're down almost $4 right now to $19.20 ahead of the market open on Rite Aid. All right, folks, let's go over to our man, Kevin Hinks, 11 a.m. Eastern time every day on Tiger TV, folks. Kevin Hinks, Alex Coffey, the team at the TD Ameritrade Network. They're talking fast market. They're talking trading. They're talking options. They're talking hypothetical trades. Folks, the best way to learn something, okay, is to get into the nuts and bolts of actually seeing how trades are constructed, how trades are managed, seeing them happen. They use the demo account. They're trading every day on that thing, constructing trades throughout the market. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. Interesting day setting up here today. These markets look a little shaky to start the day, even though we got good data out of GDP, good data out of first-time filers for unemployment insurance for jobless claims. We've got bonds a little higher, yields a little lower. Now, 10-year yield now below 1.6%. But that being said, you still got markets at least starting the day a little shaky, Tommy.
It's a great point, Kevin. I was going to kick it off and even ask you, I was going to say, could it, not be any better, right? The jobs number, of course, could have been better. I was just talking about, all things considered, it's still almost 700,000 on a weekly basis, but well off the numbers they were looking for. They revised GDP numbers higher as well. And as you mentioned, we got a bond print of, last I checked, 1.598 we're talking about on that yield on the 10-year. And you're seeing a little bit of hesitation in these markets. Of course, we got Nike trading lower in dramatic fashion today, putting a little weight there as well. We got some Fed speak out there with governors speaking again today following what we had yesterday. We got Darden restaurants rocking. We got a lot going on, Kevin. What are you guys going to be talking about at 11 o'clock this morning coming up on the program?
So real interesting. Again, when we're in this time between the end of earnings season and the beginning of next earnings season, we're going to look at gaming stocks today. So we're going to look at MGM, we're going to look at DraftKings, and we're going to look at Penn National. So 3 betting. Why not during March Madness look at gaming stocks and how they're doing? So we're going to look at all little gamers and bettors today.
Penn Gaming, that's Penn National, right, Kevin? Is that
Penn National, right?
What a story this one will be, right? In terms of course, they have Barstool behind them, the big platform out there, Barstool Sports. This stock trades down to $3.75, folks, at the low. We just peaked out at 142, but watch out, we're back to 100, just like that in no time. Right. It's interesting, Kevin, seeing some of these private equity firms, right, buying up some Vegas. It was the Venetian got sold out there to, I think it was Apollo. At a time you have, whether it's gaming in person, talking about the acceleration we might see from travel in Vegas, or just the acceleration of gaming in general in terms of gambling ramping up across all, whether it's New York, New Jersey, et cetera. Some of these companies perfectly positioned. The run that some of these companies have had, Kevin, whether it's Penn, whether it's MGM that we've seen, pretty remarkable when you look at where they've come from the depths of the bottom of COVID when sports weren't happening at all, right? We didn't even know if we were going to be able to have football, basketball, et cetera. And we find ourselves now in March of 2021 in quite a different world with some of these gaming stocks as we look to open up travel as well when you talk about a company like MGM.
Right, exactly. But, right, on the other side, this market right now looks like it wants to take some premium out of some of these high flyers. So Penn National right now, looking down about $4 pre-market. So, like I said, there's a little volatility in some of these highly speculative names that have been trading during the last year. So, Penn's one of them. DraftKings we'll look at. Yeah, it's going to be kind of interesting because, have these stocks, the big issue with a lot of these names is valuation. And have they run too far, too fast? So that's what we'll work through today and talk about and discuss.
I guess anytime, Kevin, that you have a stock that goes from $3 to $142 over the course of about a year, you better be prepared maybe for some volatility and a potential pullback, man, as it's been quite a rocket ship for Penn. A lot of these companies, man, the depths of the COVID lows, we'll call it, back in March. Well, Kevin, we look forward to the discussion on Fast Market coming up at 11 o'clock. As always, man, we hope you have a great program, and we hope you have a great weekend as well, man, and we'll talk to you next Tuesday.
Thanks for having me on, Tommy.
Thanks so much, Kevin. Take care, man. All right, folks, stay tuned. We're going to check out these markets. And, check out the program, folks. Fast Market at 11 o'clock. Whether you're in the options market or not, like I mentioned when bringing Kevin on, folks, the best way to learn how to do something is to see it put into action. You know, to see actual hypothetical trades of what they're trading, the methodology behind it, the bias behind it. They do an amazing job. I personally have learned a tremendous amount watching the program for Kevin and the team over there. When I was first getting into options, it's just a tremendous education that they put out completely for free. We're fortunate to have a relationship with TD Ameritrade and Thinkorswim, as they put out quite the education completely for free, all available on the Tiger TV network every trading day, folks, 11 a.m. Eastern time. And yeah, as Kevin said, I mean, my goodness, right? So there's Penn up to 142. MGM from, and like I mentioned, you got to back it up, actually. We're not getting the COVID lows now. If you go back a year, $6, and we're above where we were trading at prior to COVID. But you know what, folks? That might be warranted. Because, boy, I can't wait to go have some fun in Las Vegas, potentially, in a post-COVID environment. Maybe I'll actually attend another Traders Expo again in person. Wasn't sure that was going to happen, but maybe just to make it out there. Stay tuned, folks. We'll be coming right back to the market open at 9:30.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the market open, and we're sitting right where we were pre-market with the S&Ps down about 0.5% right now, trading at 38.61. You get the NASDAQ 100 down 0.7%, 12,698. The Dow off 160 points right now. That's 0.5% as well. And the Russell, volatility continuing. Russell just dipped below 2,100 pre-market. You're trading at 21.04. Bitcoin trading at 51,000 right now. Look for that acceleration to negative prices, folks. Not what you'd want to see on the type of news that you got. I had an A to B, C to D on here. You made that D projection at about 55,000. You've been chopping around between 45,000 and 60,000. Maybe that's the trading range, folks. Maybe it's got a $15,000 trading range in Bitcoin, but not what you want to see. When you think about the acceleration that we saw yesterday, you have Elon Musk, potentially Bitcoin's greatest cheerleader, as potentially the world's richest person. Maybe he's number 2 to Bezos right now, but when you have somebody like the world's richest person, and he's either number 1 or 2, right? He's number 2 right now, but nonetheless, being a cheerleader, you have Elon Musk controlling the financials of a company like Tesla. Let's see what Tesla's worth right now. Tesla's worth, what is it, $500 billion or something like that. You pull up the Analyze tab on the Thinkorswim platform, you go over to the fundamentals, you pull it down, $593 billion, okay, is the market cap of a company like Tesla. You have Tesla now accepting payments in Bitcoin for their vehicles. You have them already having $1.5 billion in Bitcoin for their cash. And maybe it's all factored in, folks, because you finally get the announcement that they'll be accepting Bitcoins as payments. And you were sitting at about 54,000 on that news. You trade up to 57. Now we're down to 51. Not the news you'd want to see. Pretty encouraging news fundamentally, but nonetheless, you're actually below where you were prior to that news event on Bitcoin. All right, jumping around to what else we got going on. Interesting article over here on Bloomberg. So what I wanted to talk about is what they make the point is history says bond traders are terrible at timing the Fed liftoff. The tendency is to prematurely anticipate hikes from zero. This is JP Morgan. The degree of disconnect now is simply glaring. Pretty interesting when you look at where we are in terms of the discussion of rising rates, right? To pull up the 10-year, to see the action, it's been quite a run. Now we're getting a little bit of a reprieve in the last few days. We're still sitting at a yield of 1.6%. I mean, you see the drop-off from August. You see the drop-off we've had even since the start of the year, where we were trading with a 138 handle. We're now trading with a 132 handle. We're a full point off of the lows. But boy, I mean, that's not tremendous strength, right? And you even look at the volume we have on the 10-year. You don't have to be a charting volume genius to see where the volume lies on accelerating to lower prices, lower prices. I mean, it's waned a bit as we've come up a bit, the 10-year. Now, check out this acceleration that they saw and what actually happened prematurely. Derivative markets have tended to prematurely, I'm going to zoom here to get this, zoom in to get this chart a little bit bigger so everyone can see it. All right. Derivative markets have tended to prematurely anticipate rate hikes. In the dark black line here, you have the Fed funds effective rate, the 1-month moving average, okay? So this is the actual rate in the black. That's the Fed funds rate. That's the one that actual matters. That's not any type of anticipation or forward pricing. That's the actual Fed funds rate, which right now sits at about 0%. Now, what's interesting is then you have the derivative markets pricing of forward rates over a 2-year horizon. The point being, okay, if you look at this chart, many times, whether it was from 2008 all the way through for 2016, the market continually was the derivatives market, was continually pricing in forward rates that were going to rise much faster than the market actually rose in terms of the rates. Could we be seeing that yet again? It's something to keep your eye on, folks, because the Chairman Powell, he's been out there saying it's going to be it's going to be low for an extended period of time, and all the rhetoric is coming around to the fact that maybe they're going to have to raise the rates much faster than they were first anticipating. Now, you get into some of the history of things, okay, in terms of the last cycle. I want to make sure we cover 2008. Here we go. So since 2008, markets have underestimated how patient officials can be in lifting borrowing costs from zero. After the Fed first slashed rates that low during the financial crisis, it's going back to 2008, hedgers and bettors in money market derivatives established a track record of being consistently too aggressive on a first move higher, according to JP Morgan. In late 2008, check this one out, okay? In late 2008, traders already saw several hikes in the following couple of years even though it ultimately took officials until 2015 to tighten. And I think it was only like one hike, right? Or it wasn't much in 2015. That pattern may be happening again. The savviest speculators in interest rates are looking at trillions of dollars in stimulus and an accelerating vaccination campaign, and they're concluding that there's no way rates can stay this low. Don't ever say no way, folks. Chairman Powell, he's sounding as confident as he can, and we need to make up 10 million jobs. That's the number you should keep your eye on, because that's the number that Chairman Powell, I think, is keeping his eye on. We need to make up 10 million jobs to get to the number that we were at a year ago. We're far from that level, even with the S&Ps flirting with all-time highs. Swaps and futures now reflect almost a quarter point of tightening late next year and fully price in 3 increases of that size in total by the end of 2023. We'll see if that happens. I mean, you get into the last cycle, traders were reluctant to align their wagers with the speed of increases officials were penciling in after the central bank began its last tightening cycle. That was in part because after 2015, the Fed failed to deliver the multiple hikes it had projected. It tightened only once that year. As the Brexit vote dimmed the growth outlook, that's the thing, folks. It's like, you know, the Fed's forecasting to 2023. If the last year has taught us anything, talk about the always expect the unexpected, as in there's nothing to say that things are just going to be completely rosy for the next 3 years that's going to allow 10 million more jobs to come into the market, to lift off. I think they're going to. I do. I think it's going to be a roaring 20 style acceleration when we come out of COVID. There is a pent-up demand greater than we've ever experienced. I said to somebody just in the last couple of days, just as a human, speaking to humanity, I hope that humanity never goes through anything like this ever again in my lifetime, because we barely had the patience and ability to survive this one. Humans aren't meant to, folks. I can't see it happening again, and hopefully it never does. Point being, everybody is going some type of crazy to get outside. It's going to be quite an acceleration, and hopefully you see that service sector explode. You see it happening in the stimulus, exploding spending money. The Fed said last week that it will keep rates near zero until the labor market reaches maximum employment and inflation's on track to moderately exceed 2% for some time. The only fear here is that inflation explodes prior to getting those 10 million jobs. You see that happen, you're going to see Chairman Powell potentially have to raise the rates, but we'll see if it happens at all. They get into the dots of things, but interesting. When you look at that chart, folks, keep that in mind. Over and over and over and over and over, from 2009 to 2016, the market continually priced in more rate hikes, anticipating that they would have to raise rates, and continually they were disappointed as rates stayed zero over and over. Now you even see it happening again, whether it's 2018, 2020, across the board, pretty much. The only time that they were under that level was when you actually hiked a bit, 2017 to 2020. Stay tuned, folks. We come right after the break. Give us a call, 877-927-6648. We'd love to hear from you.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we get a little volatility as we start the trading day off. How about the tech stocks trading higher? We just got a bump to the tune of about 100 points in the NASDAQ 100. We're trading right now just off by 6 points at 12,787 versus the Dow, where you actually saw an acceleration to lower prices on the open there for the Dow. And how about the gold contract? Check out that pop from the open. 8:45 this morning. We're trading at 1724. Just in the last 45 minutes to an hour, we're up about $20 in gold, trading at 1743. Other economic data out there. Personal income out this morning. Americans earned an additional $1.1 trillion last year, the most ever in data dating back to 1930, thanks entirely to stimulus checks and other government aid. You had the total U.S. personal income rising 6.1% last year to $19.7 trillion as a surge in pandemic-era aid outpaced gains in wages, property values, and other sources of wealth. According to the U.S. Bureau of Economic Analysis, the dollar amount of so-called transfer receipts, which include COVID relief payments, steered income growth in 26 states, while increases in other types of personal income led in 25, including D.C. Strong numbers out there for personal income, basically helped by the aid given over government, a biggest number, most ever in data dating back to 1930 for personal income. Gold rocking to 1744. Not sure if it's coming out of that. That personal income number was out at 7 a.m. So, gold matters to the personal income in terms of some time, but you're just seeing an acceleration, folks, right out of the gate from 8:30 on that weekly jobless claim number, with gold accelerating higher. All right, what else we got going on in terms of stories out there? How about cannabis? So yesterday, you got New York. So it seems like they've reached a deal. Now, things always take forever, folks, in terms of you have New York, you have the legislature and the governor coming to a deal, and it looks like New York's ready to legalize recreational marijuana. The state would impose special pot taxes and prepare to license dispensaries under an agreement reached by the governor and legislative leaders. Could take about a year for this to come to fruition in terms of real numbers out there, in terms of what they can do. Yeah, and as we're talking about it, we get some good info in the den. We're just going to push it out there because it's pertinent. You have the governor of Florida, where we reside, TFNN, based in beautiful St. Petersburg, Florida, announced on Twitter today that Florida will lower the age of coronavirus vaccination to 40 on Monday, then open eligibility to all residents 18 and older a week later. Thanks to our man GB Tampa in the den for that information. Folks, I was fortunate. So they opened it up to 50 and older for everybody this Monday. One county in particular, Orange County near Orlando, they opened it to 40 and older, really because they had seen, and you know what, the governor's probably seeing it right now, if he's dropping it to 40 just that quick. They want demand to exceed supply, right? And Orange County in Florida, and I'm jumping around a bit, we'll get back to the pot conversation in a few minutes, but this vaccination deal, you're going to see it in a big way in terms of opening up everything, because Orange County in Orlando, they had already vaccinated a majority, I think it was like 70% of their population age 65 and older. They had not reached, I think they could do about 3,000 shots a day at the convention center there in Orange County, and they were not reaching that number for almost 2 weeks. So I said, you know what? We got to open it up. Seems like the governor's following suit. That's probably happening across the state. So as of Monday, 40 or older. A week later, 18 or older. You're going to see it happening across the board, folks. I just spoke to it in terms of the acceleration we might see for a roaring 20s type acceleration. That's great to see in terms of the vaccination opening up. And I encourage you, folks. I got mine on Tuesday. I was fortunate to get, I got the Pfizer vaccine. I tell you, the first vaccine, I was a little bit sore on my arm. That was it, right? They say the second shot, the side effects might be a little bit harsher. Folks, it's 1 to 2 days, potentially, really worst case scenario, where you suffer some side effects. That's just your body reacting to and building the antibodies to the virus itself. It's safe, it's effective, it's how we're going to get over this thing. I encourage you to do the same if you have that opportunity. All right, back to the cannabis sector, though. So, New York, they're going to legalize everything. It's a three-way agreement. It's been reached. The drafting bill is in process of finishing a bill that has the support, the deal that leaders brokered. Man, the taxes, right? It's all about the taxes. How about $350 million a year? Right? That's over $1/3 billion every single year New York State's going to get for taxing cannabis. It's a 13% sales tax, 9% is going to go to the state, 4% going to go to localities, and then you're also going to get a tax as much as 3 cents per milligram of THC. That's going to be a sliding scale based on the type of product and its potency. Nonetheless, really interesting action when you look at some of these cannabis stocks. Now, full disclosure, I have some Canopy Growth. We have some in the newsletter as of recent, and I'm just going to put it on a 5-minute. You check out the acceleration. The news breaks at about 2 p.m. Eastern time yesterday that New York had legalized it. Well, they hadn't legalized it, right? News breaks that they had made the deal. You see Canopy spike from about $31.50 to $33. It gives it up entirely pretty quickly. Overnight, you dropped to $29.80, but some demand right out of the gate this morning. $31.50 again in play, kind of right where we were prior to COVID. Putting Canopy on a daily. Quite the run we've had. You back things up even to October. I was talking to my subscribers yesterday. We're right at a 618 of the full run we've had from this level. You saw a gap here that we've had in terms of that gap from early January, basically accelerating higher. That's the Georgia election gap, we'll call it. That having to do with the fact that potentially Georgia Senate elections going to Democrats. That hinting to the fact that maybe that's going to increase the potential for federal regulation easing on some of the cannabis stocks, opening it up. But boy, talk about getting a little bit ahead of itself, folks. And this is a great example of do not chase some of these stocks that accelerate higher. We've seen it a few times with these cannabis stocks. I mean, check this out. I'm going to put it on a weekly going back 5 years. All right. You had a high of 59.25 back in 2018. Folks, we're talking about almost 3 years ago. Canopy started the run. I mean, you really started the run when you were trading in the middle of 2017. We're talking about almost 4 years ago. This thing has been trying to accelerate, thinking that we're almost there. But the next stop, folks, whether it's going to be 59.25 we had from 2018, we have the highs from 2019 hovering at around $50, and then we have the high from earlier this year. Now, that had some Reddit, Wall Street bets sprinkled in there as well. In terms of the high, might be a little bit irrational, up to 56.50, but it's real, folks. There were buyers up there. There are people who are buying it and selling it at 56.50, and I imagine the next stop, once this thing really gets rocking, is going to be to come up to these highs, and we got 3 of them. We got from 2018, 2019, and the area from 2021. Really interesting when you look at the high we had, 56.50, made it within a few bucks of that all-time high of 59.25, dating back to 2018. But it looks like at some point the dam is going to break. And, federal legislation, cannabis will be taken off a Schedule I drug, which is just insanity in terms of why it's Schedule I drug. I believe cocaine is like a Schedule II drug because it might have medicinal effect. There's just bananas going on that federal drug schedule list. Cannabis still on a Schedule I drug, which makes it impossible to study it, makes it impossible to do a lot of things, and hampers this industry in a big way. But I imagine you're going to see a change there, folks, and maybe this will be the bump. As you got New York legalizing it, you have New Jersey legalizing it, and we'll see where we go from there. Tech stocks back in the red. We got the NASDAQ 100 off by 46, S&P's off by 18, the Dow off by 221. We might get a 31,000 points in the Dow. We're flirting with 32,093. Stay tuned, folks. I'll be right back in 3 minutes from the break.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets sliding a bit to the negative, continuing the run. S&P's off about 25 points right now, so they're chatting about in the dent. And we got a hearing today going on for some of the tech stocks. So interesting what they call it here. You got the Subcommittee on Communications and Technology and the Subcommittee on Consumer Protection and Commerce of the Committee on Energy and Commerce are holding a joint hearing titled, I should say, Disinformation Nation, Social Media's Role in Promoting Extremism and Misinformation. You're going to have Zuckerberg there, you're going to have Dorsey there, and you're going to have Pichai, who's the Google CEO. Not as notable as Zuckerberg and Dorsey, but man, Google's been on a tear. But you got the three of them happening at 12 noon Eastern time, and really interesting when you look at these companies in terms of Facebook, quite a pop on the open from 280 to 286. You look at Google shares, you're trading at 2,045, but check out the daily of Google. Talk about just sitting at all-time highs right at around 2,100, chopping around between 2,000 and 2,100. Twitter shares, been on a tear recently up to 80, but talk about giving back 25% of the company's equity from 80 down to 60 so far this morning. And we'll pull up Facebook. Been a rocket ship as well. Facebook been chopping around between about 240 and 280. We're sitting right near the upper boundary of that level right now at 284.04 on Facebook, as they'll be participating in that virtual, all virtual meeting going on today at noon Eastern time. All right, checking back in on some of the things we got moving. Crude oil down about $2.21 right now at 58.96. Gold contract giving back some of the gains. Gold continuing to be volatile at 17.36. We were up at 17.44. Silver with the volatility as well, above 25 and just under that level at 24.90. And we'll finish it off with notes and bonds, folks, continuing a run. So we got some higher price and lower yield. We're talking about a yield right now of 1.594% on the 10-year. Thanks so much for tuning in, folks. Stay tuned. We got our man Basil Chapman coming up next with the Tiger Technicians Hour, live from 10 till 11 a.m. Eastern time. Fast Market at 11 o'clock. Our man Larry Pesavento coming up live at noon. Steve Rhodes at 1. Dave White at 2. Tom O'Brien, my dad, live from 3 till 4. Thanks so much for tuning in, starting your day with me, folks. And stay tuned. We got our man Basil Chapman. He's coming up live next in just 3 minutes. Stay tuned, folks. We'll be right back.
Building wealth